We're here in Monte Carlo for the Rendezvous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Bill Pieroni, President and CEO of Acord. Bill, welcome.
Oh, Richard, thank you. It's always a pleasure spending time with you and AM Best.
It's great to have you with us. So, Bill, we're in a hard market like no other. In what way is it different from the cycles of the past?
It's interesting you say that. I looked back and we started keeping accurate records mid-1940s. And literally 45 to, let's say, early 50s was the only market I could find that was as similar as this one. It was, of course, punctuated since then by various hard markets, but this one, more substantial, pervasive, adequate capital, exceeding weighted average cost of capital, return on equity numbers. So it's unique in that it's unique. There have been so many hard cycles, but none like it since late 40s, early 50s. Of course, it's a post-World War II phenomena. I wouldn't equate the pandemic with that, but very unique in terms of the overall results. I think a rethinking by primary carriers, brokers, and reinsurers around the role of reinsurance, returning back to its roots, higher layers, less frequency type of cover. So it is truly special. It was an important question. It's very different.
So you talked about the rethinking of the role of reinsurers. Tell us a little bit about what the current market conditions mean for the way that insurers and reinsurers can rethink their relationships.
Well, given the increasing rate on line, which, by the way, is entirely required. So I would say these type of economic returns are what the industry should have been achieving. So let's start with that by saying reinsurers and the returns entirely appropriate. It's compelling primary carriers to think, wow, I do need to really, I'm a carrier. I need to retain lower levels of risk. That's the business I'm in, right? Underwrite, price, rate, manage loss costs, deliver a strong investment return and customer relationship set, and we're in great shape. So from that perspective, I would say they're having to return to their roots as well as real underwriters, because reinsurers are adequately priced, appropriately priced. I think we talked last year about there's a capacity problem, there's a rate problem. Magically, there's enough rate, but people don't want that high frequency type of cover. So forcing primary carriers to assume the role they historically did, and reinsurers as well. So it's almost back to the future.
So one of the notable things about this hard market is there's been no substantial number of new startups. It's quite unusual from in a hard market cycle. What might the consequences of that be?
Well, I would hope that it extends the logical and natural hard market that we have today, given the historical low returns. So given that there haven't been an influx of, let's be kind and call it irrational capital chasing these perceived superior economic returns in the reinsurance sector, I would hope that it extends this hard market cycle, allows key stakeholders, particularly primary carriers, reinsurers, and the brokers who serve them all, to maintain rational positions around capacity, competency, rate online, etc. So I'm going to hope that it extends the invisible hand of Adam Smith in returning the market to rationality.
Bill, thank you so much for joining us.
Thank you, Richard.
For AM Best TV, I'm Richard Banks.